In this video, guys, we're going to look at 7 steps to simpler trading. Let's just start to simplify things. Let's just start to take the complexity out and make trading a lot easier and hopefully a lot more profitable for you. Stay tuned. Hey guys, welcome. I did an interview with him. Make sure you go and check that out, Chris Weston. We're talking about the longevity of traders and how we all want to get longevity and create a system that allows us to be in the markets for a long period of time, generate the returns we want, and not blow up our accounts. And one of the things that I definitely see is simplicity is king. And also from myself, guys, I know I've had times when my trading has been the most simplest and the kind of easiest, if you like, and the profits have come more easily is when things have been simple. I've not overcomplicated. And when I kind of fall into a trap of trying to overcomplicate things, that's when you see the equity curve start to stagnate a little bit. And you think, right, I'm overcomplicating it, step back. And sometimes it's counterintuitive. Don't get me wrong, I get it. Sometimes you think, oh, what more complexity can I add if I add this and add this? Well, that kind of boosts my P&L. And sometimes it kind of feels a little bit like, oh, if I'm simplifying things, am I making it too easy? Should I be able to make good profits with an easy system, an easy approach? And it is actually the case. The easier and simpler your approach, and the more relaxed you are about it, the more profits you'll make, the better trades you will make. Okay, so by the way, guys, as always, no guarantees with this. I don't know your personal situation. I don't know how you're trading, what you're trading. All I know is that from observing many traders and myself, simplicity nearly always has a better outcome on your trading. So definitely try some of these things out and add some of yours in the comment section below if you want to. All right, the first thing is remove most of your indicators. I know many of you are like, well, you couldn't say that, Mark, because you're a price action trader, you like this. Yes, but I do also like to use some indicators from time to time. I like my VWAP. I like for specific strategies, stochastic on a couple of strategies. I like a moving average, but I just don't pile them all on. And I see a lot of traders piling all the indicators on, and then they're confused and it's kind of, they get this paralysis by analysis and just push them all back. And this might be uncomfortable for you. Take them all back. If you want to leave one on, choose your favorite. Is it a moving average? Is it stochastic? Is it RSI? What is it? Because what this does is, again, we're just simplifying things. And hopefully you can get to a position where you might have specific strategies that rely on that indicator, which is fine, but you're not using them all the time. Number 2, simplify your stop levels. Often when we're in the trade, like, where should I put a stop? It needs to be X ticks away, it needs to be this away, this is my position size. And yes, in theory, that's kind of good. We've got the fixed risk per trade, we worked out our position size, our stop size, etc. But where do we put the stop? Do we put it under this? Do we put it under that? Why not simplify things? And again, sometimes you've got to take 3 or 4 steps backwards before you can take a leap forward. So sometimes taking this step back and pruning things back to basics helps you springboard yourself forward rather than kind of grinding and trying to get through something. So let's say if you're day trading, why don't you just always have a stop under the daily low? If you're a swing trader, why don't you always have it under an X day low? You've simplified the process rather than trying to go, well, is that a level? Is it not? Could I have my stop there? Is it just put it in a wide position and always have it in the wide position and just reduce your position size to suit. See how you get on with that. You might find, hey, you know what? This is much better than me trying to be aggressive and increasing the position size and tightening the stop up. And then once you've got the data, you can adjust it and tweak it to suit. But having that simplified stop level just makes things so much easier. All you're thinking about now is just entering the trade in the correct time, in the correct manner, with the correct risk. You're not overthinking, hey, where's the stop going to be? So think about that. Maybe it's a fixed stop based on ATR. That's a great volatility type stop. What's the average true range like? Okay, it's X. I might have a swing trade of 3 times a daily ATR on a 14 period. Whatever it may be. But having that simple stop level, again, takes a lot of cognitive load away and simplifies your trading. Number 3, create fixed risk and position size. Really, this is about understanding that you can overcomplicate things. And I know that we sometimes go, okay, what's the distance of the stop? What's this? What's that? and to adjust the position size to suit. Maybe I vary the risk. But again, if we're going back, taking a few steps back and simplifying things, you can always add little bits of complexity if you feel you need to. But having a good base of simple trading is a great position to be in, guys. I promise you, it's such a place of clarity and of calmness and confidence when you have that simple base and you go, right, well, I can add little bits now. And that simple base might be, you know what, I'm going to do this position size. I know my stop level is going to be approximately this. This is my fixed position size. This is my fixed risk, if you like, and adjusting the position size very slightly. But again, reducing the decision-making process, having it stop reasonably wide, having the position size reasonably small, and seeing how you're getting on. Simple, simple. When you find you're getting success with that, then by all means work out what your grade A setups are, when to dial up the size, all this kind of stuff. But all this complexity at the moment is probably hurting you. Fourth thing is trading batches. I've got to give a shout out to Scottish Mind with this, for this idea. He trades in batches of 10. So in other words, what he does is he knows approximately how much he's risking per deal. He knows approximately his worst case scenario loss. He doesn't focus on anything more than the 10 trades in front of him. So he tries to get 10 good trades under his belt, and he knows if he loses one, the point is he's not bogging himself down with thoughts about performance and this. It's like, hey, do 10 good trades, and he's a reasonably short-term trader, do 10 good trades in a row, then I'll review. And that's working exceptionally well for him, and other guys as well have taken that on board and decided to do that. So that's something you can think about. Trading batches, say, hey, this is my risk over a 10 trade period. These are the type of trades I'm going to take. Right, I'm going to focus on these trades. I'm not going to overanalyze each individual trade. I'm going to wait for 10, then I'm going to review my process. That's a great idea, something to you to try out. Let me know if you like that one in the comment section below, guys. Fifth thing, create simple filters. A simple filter stops you over trading. I'm not going to trade past a certain time. I'm not going to trade if the price is, I'm not going to trade short if the price is above a moving average. I'm not going to trade long if it's above a Bollinger Band. Whatever it may be. And again, be careful with the indicators here, but creating a very simple filter. I want to trade only when the ATR is above X. I want to trade only when this, that, and the other. Simple filters to keep your trading simple and to keep you from over trading and adding complexity into your process. The sixth thing, guys, is have less than 3 trigger patterns. What do I mean by this? Many of you guys know that I'm a filters and triggers guy. I have filters which I need the trade to pass through. Then once they're through the filter, I have what's called a trigger, which gets me into the deal, gets me into the trade. So it might pass the filter and never get a trigger and then it goes back to 0. It might even pass the filter, but it has to pass 2, and the trigger is actually placing the trade. It's the final little sweet spot entry. But again, many people have so many triggers. They're looking for this candlestick reversal, you're looking for this exhaustion, you're looking for this double bottom, you're looking for this candlestick pattern, you're looking for that candlestick pattern, that indicator. Simplify it. Chuck them all away and go, right, what's my best 3? My best 3 might be an intraday reversal off the low above the VWAP. My best 3 might be a dip below the prior day's low and push up higher. My last one might be a drive above high and hold buy. Whatever it may be, 3 simple ways of getting into a trade. That will help you. Seventh and final thing, guys, do not burden yourself with admin. I know I talk about journaling, I know I talk about planning, I know I talk about all these things, and yes, they are super, super valuable. I definitely recommend these things. However, if you're overburdening yourself with reams of data after each trade, with reams of stuff to write, with reams of things in your journal and your checklist, got to go through all this 4-page checklist before I take a trade and I've got to write this stuff down, you're just not doing yourself any favors. Simplify the process. Say, hey, very short, very small checklist, and at the end of it, very short journal. It doesn't have to be much. Just start, again, keep things simple, keep it relaxed, build the confidence, build the clarity, and then once you've got that foundation of simple trading with a few setups that are working well, yes, you're not going to be killing it, you're not going to be making huge amounts of money, but you've got a great purpose and a great kind of foundation again to work from, and then you can look to where I'm going to push the size up, where am I going to take more risk, where am I going to kind of increase the number of trades I take, where am I going to adjust and tweak these dials so I can maximize and squeeze every ounce of profit I possibly can from these setups that I know work well for me, and where can I eliminate ones that aren't working. So simplify your trading, guys. Those are 7 steps of simpler trading. Do check out our channel sponsor. I linked them in the description. I linked them in the description below. And if you like this kind of stuff, thumbs up is much appreciated, guys, as are your comments, as are all your shares, likes, and all your support. Take care. Bye-bye.